Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. This stream's about integrating bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. Based on structured trades, and those are available to everyone as well as a library of webinars and the TraderLab community. And that's all available at no cost, anytime, anywhere. It's up to you as a developing trader. If you're not getting the results you want, and even if you are, come to TraderLab, because the idea of TraderLab is to leverage the collective experience of the community. It is a substantial community with a substantial experience. We've all walked in the same shoes. We've done the same things. And the thing about all that is it's trading is a journey of trying to sort things out. And initially, what most developing retail traders do, and I was guilty of this myself when I was first starting out in 1980, as indicators were new, was more would create more certainty and more confidence. And the term, if it's in your head, confirmation, is something that is absolutely not relatable to a business that's random. Now, most of us are trying to overcome randomness by creating certainty. It's very logical, but the fact is, this is a gaming business. There's absolutely no certainty. It's 100% random, 100% of the time. And the thing about it is, most of us, because of our primal wiring, want to create something different. We want to push back against what we're actually, the environment we're in, versus adapting to the environment. So the idea of TraderLab is to help developing traders understand the business of trading and what is the environment we're operating in and why is it so challenging for us? What makes it so difficult? Do you know why this is so difficult? It's not because it's complex. It is absolutely, in my opinion, again, not complicated. Here's the thing that we define as complexity, randomness. And there's a tremendous difference between randomness and complexity. We create complexity to try to overcome randomness. But is it possible that keeping it very basic and very simple can help create clarity in a random environment? Think about that. You may ponder that and go, what is he talking about? Well, follow this stream, visit the TraderLab, and maybe you'll find some things that may help you on your journey. And thanks again for visiting TraderLab. Now let's get into it. There's a lot to talk about. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. If we get into real time, we talk. And if not, come to TraderLab. There's loads of charts and a library of webinars that you can watch on this process. There's not much time for me to go, shall we say, and get into everything for you right here. But I try to do is take snippets of different things, different educational pieces, and show you how you can integrate tools. So this is yesterday's RTH. Now, there was a day. I left my breakfast and lunch on the table yesterday. And this is called a microcomposite. All I'm showing you here is a higher time frame. Now, if you remember, on this day, we had shorts up at the high of the day. But when I say at the high, within a couple points. I call that the high of the day because if you get near it, you're doing pretty good. So this was shorts. Now, here's the thing about this day. The idea, and I've been speaking to you guys who follow the stream about this, that we had the market is long. And what happens is when the market goes up, sell, stops, gap, oh my goodness, going to the moon, Alice, new all-time high. And what happens? You have a gap, sell, stops. Now, what happens here is we open and whatever we did, we came down here. We took these guys out. And what about these guys who are long in here? We took a lot of stops out, but we didn't get under here. Isn't that interesting? Now let's go further. Now I have shorts in this leg. Oh, it's going to zero. And my low is here. So theoretically, let's go get these guys. It's all over, Lewis. Well, maybe not. Inside day. We are in an uptrend. Now, what are the possibilities on an inside day? It's compression, a coil, if you will. Inside day is sellers here, buyers here. What's happening? And then either you're going to go this way or you're going to go that way. Well, the higher time frame is up. So as they say, do you feel, is Dirty Harry would say, or do you feel lucky? Well, do you? Well, yeah, okay, going up. Sell stops, going up. New all-time high. Sell stops. What happens? The market goes up to go down. It goes to go up, to go up. And then what does it do? It goes up to go down. Where's the stops? There and there. Now, this is where it gets real interesting. And if you follow the streams, you've been following this. Sell stops are there. Sell stops are there. Sell stops are there. And this was pretty amazing. On these days, I was taking shorts and then eventually longs, but shorts to get into the stops. Market goes up to go down. But what is happening? Sell stops. We don't get them. High or low. What happens here? Come down again. We got you now. We don't take it out. Reversal. Sell stops. Sell stops. Sell stops. Now this day, which was a short all day, day before yesterday, which was a joyous experience, this was the target for the shorts. And you can see this is called the auction. Now, yesterday, I got to tell you, yesterday was a bit of a twist, if you will, because yesterday, when we opened, I was looking for longs, if you remember, but the ETH high was an obstacle. So I initially in the morning was taking longs, and it couldn't get through the obstacle. The target was to come up here in the morning. Now, we didn't do this till the afternoon, and then we get tweets, and yesterday was a very hard day. If you had a hard time yesterday, welcome to the party. This is trading, and it's always random. Remember, how do we know what's going to happen here? How do we know there's going to be tweets that POTUS says he's going to fire the head of Jerome Powell, head of the Federal Reserve, and the market does the Acapulco cliff dive? So, and he's holding a letter, I mean, this is just crazy, right? Now, what is it about the market? It's 100%. What did I say at the top of the stream? 100% random, 100% of the time. Not only is it random just in the nature of the rotations, but any kind of inputs that come in can scramble it and change the trajectory, or everybody runs to one side of the boat. So what did we do? Well, if I was looking for longs, and I was taking some longs until it became somewhat apparent that it was shorts, then it was get short. And this became a target coming down. Now, at this point, I was looking for it to come under here, get this, and then come back, and it was called responsive. So what I wanted to do, and that's why I was taking longs in the morning, then I was taking shorts, and then I was trying longs again to come back across the range and go there. That was my plan in here. Okay. So anyway, it did much more than that. It took these out. It took this out. It took this out. Everybody under the bus. And where's my support? Stops are under here and stops are under here. This is my next area of interest, this high volume. And boom, we got there. And then it was longs to come across the range. And if you're in TraderLab, all these were narrated. Now, what does this mean, though? Let's talk about this. If we wipe out, remember how the market works. The market goes up to go down and goes down to go up. Market goes up to go down and goes somewhere down to go up. Well, this, not so much. Part of the thrill of randomness. But once we get this tail, doesn't that tell you there's aggressive buying? What does that do for us? Well, if you're in TraderLab, what it does for us, it says, let's get long somewhere. Now, what is the somewhere? Let me show you. There. And then up the financial food chain. 24 is a target right there. 30 is a target here. and possibly new all-time high, and it's not our concern. Here's what I want you to see. This is the highest volume in this whole thing. This, the Acapulco cliff dive, and then the buying tail is about as bullish as it gets. And of course, it's not a recommendation. Anything can happen. This was our targeting for yesterday to there, actually. Open, test, too low, longs, and all it's been is longs in TraderLab all day. Now, hope you guys are following. I hope you're getting something out of this. Now I'm going to get into the RTH. Now, before I go any further, what was that level? It's called the Microcomposite volume point of control. That is that. Oops. So I want to show you how this all relates, because this is all fractal. That's the 03-ish is this level right here. So, and it's value area high from yesterday. These are important levels. Now, grab your pen and paper. I'm going to give you some statistics, and you have to vet these for yourself. As they say, past performance not indicative of future results. So there's that 04-ish. There's value area high. There's the ETH mid. So we're opening higher inside of yesterday's range. So higher is as it relates to settlement. And there's value area high. So we're opening in range, out of value, but in the ETH high is here, okay? So remember that. Now let's look at some statistics. And the thing about statistics, everybody, you need to understand, none of these pieces stand in isolation. They stand together. And it is all based on the condition of the market, not some number that's pulled out of 1,000 days of data. The data or these statistics do not know the condition of the market. The statistics do not know that we threw everybody who was long under the bus yesterday, and then the buyers came in and bought all that inventory up. That's why we want to get long. Statistics have no clue, but they can give us guidance. So write this down, and you have to vet everything for yourself. I see I just got my next target up here. Okay, so taking out the first hour's high or low, there's about a 98% probability. Taking out the ETH high or low, 97% probability. Getting the value area high or low, 89% probability. The previous high or low, 82% probability. The ETH high on its own, 76% probability. The overnight mid, 75% probability. Value area high, 72% probability. See? And then we have our microcomposite volume point of control. Oh, ETH volume point of control. That means highest volume. If you don't know this terminology, this is all market profilage and volume profile. And there's glossaries and webinars and documentation in the TraderLab. If you haven't come to TraderLab, why not? There's a link in the bottom of YouTube, and there's no cost for it, you know. As my mother used to say, free is good. Overnight volume point of control, approximately 82% probability. Yesterday's high on its own, I got to find it, about a 59% probability. This is the highest volume price from day before yesterday, I believe. 63. Yes. Yes. No. Yes. This was a target for yesterday. Okay. And then we have ETH high. I know you're writing this down. Let me just get this one for you. 76% probability. Then what else, you ask? And I'm going, I wish I knew. How about this? 24, next target. 30, the next target. And that's not, I don't know if it's, no, it's not on this one. And then up the financial food chain. All-time high, no clue, not interested, doesn't matter. Okay? Everybody tracking? You got questions, post them. How are we doing in YouTube? Is everybody conscious this morning? And how are we doing in the Bookmap Discord TraderLab community? Are we having a decent day today? You know, guys, what I pointed out yesterday in yesterday's stream, yesterday I found very difficult, very annoying, very frustrating, and everything that can go wrong pretty much goes wrong because as retail traders, we don't have deep pockets. So it's an alignment business. Well, I found yesterday, I felt like I was body slammed about 20 times to the mat trying to get in alignment, and it was not a great day for me. When all the dust settled, I recovered pretty well because I caught the longs near the low of the day, and I just took them across the range. But in the meantime, I'm telling you, I was, that's when you start getting the juices flowing. And this, I think the name of the yesterday's webinar is High Volatility Trading, managing discipline, I think it was, or staying disciplined, risk management. It's part of our business. That's just the way it is. So there's going to be days like today where it's kind of like if you have a vetted trade plan and an edge that, yeah, this is why I trade. Then there's days like yesterday, you wonder, what did I do? Why am I doing this? Well, we're doing it because we got to get the perspective that this is part of the random distribution of outcomes. That's why I said at the top of the stream, this is 100% random 100% of the time. What separates yesterday from today? Well, we know why in hindsight. But as it's happening, we don't know it's going to happen. We don't know that the longs that are sitting in here are going to be thrown under the bus, and then the bus is going to back up over them a couple times. How can you know that? Well, you can't. Now, 1 second. I have a lot of heat here. I got all these monitors and like 4 computers running. I'm melting. 1 second, please. I got to turn some ventilation on. Okay, I'm back. Sorry about that. Okay, RTH open. Remember, key location. Already gave you the stats. Settlement was here, right? This is the RTH open. This is the ETH mid, and I'm looking for longs. Now, the joy, of course, of trading is where, how, what, when. Great. This is a challenge for us because fear. Now, I always, I just tell you about my experience. My experience is I'm doing this 46 years, so I've got more experience than you, okay? There's only one trader I know that's in TraderLab has more time in, and that's Patrick, and he claims to be doing it over 50 years. I think it could have been longer, but I don't think he wants to appear, that he's been doing it a lot longer. But he's my grandfather, you see. So I'm doing it 46. He's doing it over 50. And just like me, he's got a tremendous amount of experience. He's met some of the legends in trading. And he's someone that if you haven't met Patrick or at least had an interaction with him, you're missing out. So Patrick, just saying. So this is a sweep. This is a sell sweep. Now, what do we get? If you're long and you get your RTH open, then the possibility is if everybody, normally what I tend to think, and when I say normally, I mean often, what do we anticipate? Well, if everybody's long to the gills and we open above settlement and we're still up and we're on the high end of the range, you might get some profit taking, right? That's called responsive selling. They're responding, take some profits, not a bad thing, right? However, what about those of us that are day traders who now understand that there was an excess low yesterday and the buyers were rabid? Then we may want to look for a long. I'm going to show you something. Now, these are advanced concepts. You have to vet everything for yourself. And I don't want to disappoint our visitors, whether you're in TraderLab chat in the Bookmap server or you're visiting in YouTube. First of all, thanks for visiting, but there's no plug and play. So while all of us would love to just plug something in, like you download a piece of software and it's plug and play, unfortunately, doesn't work that way in this business. This is different. You cannot imitate me. I cannot imitate you. You can learn from me, and then you adapt it to you. What does that mean, you? What are you? How do we define you? You are where your psychological or mental alignment can come in. Some traders trade very short term. It's almost like subway purse snatching. I have a different philosophy. I used to be a high volume trader many years ago. I don't do it anymore. I'm more in the barca lounger. I want to get a trade on, and then I'm looking for larger rotations. It's the only way I get paid. I got to cover the stops. So, and I take them. Everybody does. So most developing traders look for a percentage of win. Well, the shorter I get in range, the more winners I'm going to have. But I kind of thought, well, maybe it's not about winning. Maybe it's about profitability. So let's look at the first trades. This is very advanced. I'm going to show you something. Now, there's a structured trade that I share in the TraderLab called VPOC migration. I did a webinar on it. And I have to tell you, it's the last place any developing trader ought to engage because it's advanced. And the thing that makes it difficult, we're all looking for, quote, setups, and we think mechanically when we're learning. This is not mechanical. This is much more involved in the sense of it's based on the condition of the market. The condition of the market is what qualifies the trades. So during the day, you're rolling around here, and depending on the condition of the market determines, for example, this phenomena, which I researched for years to come up with this thing, because just like you, if I see something, I would start playing with it and researching it. And this thing gave me loads of trouble because at the time, I did not qualify it more specifically early on, So I couldn't figure it out. I said, I see something going on here, but why does it work sometimes? Why does it not work? Well, every trade works sometimes and not. Even if you don't have an edge, it's going to work. If you closed your eyes and picked a random buy-sell button, you'd have winning trades. That's the catch-22 for all of us. The fact we have winning trades doesn't mean that we're going to be successful and create sustainability. What happens if you have a trade that works 4 out of 10 times? It's still a loser. Are you going to keep trading it? Most of us see the 4 out of 10 or whatever it is, and we think we can make it better. And then you go on the quest for more winners. Well, what happens if that is a defective process that has no edge and you spend a year or so trying to do something with it? This is my first long. It was here. So let me show it to you. Now, this is when I am in a context that's going up. I see this sweep here. I'm looking for this to come across. My trade, and this is aggressive. This is why this is not where anybody ought to be doing anything. First of all, value area high, microcomposite volume point of control, retail in an intermediate time frame, settlement, value area high, overnight mid. This is kind of like, this is it, man. And it's either good, bad, or ugly. And who knows? Now let's look. Sellers, let's look at the delta. Sellers, 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 sellers. I get a buyer here. And what happens? This is absorption. That's where you get this. And this is resistance right here. This is VPOC migration. I come down. I have VPOC. Now, what VPOC migration is, I made the term up. I didn't know what to call it. So what this yellow line represents is high volume. And when we open, RTH open, it starts at 0. It's extremely sensitive. And let's think about what trading really is. It's shopping. If this price in the store, and this is the S&P store, is too high, you're not going to get buyers. They're going to go, I'm not paying that. Then I come over here. I'm not paying that. I'm not paying that. Get out of here. All right. Buyers are here. I come up here and I test. Do I get above it? No. I'm not paying that. Down here. Icebergs, buyers. Back to where? Resistance. You're crazy. I'm not paying that. Sellers. But look where support is now. Too high. This is very nuanced and advanced, okay? So don't worry about it. What do I know? Buyers are here. Buyers are there. Buyers are here. And I don't know that until I'm above. My sellers, now this is, again, an advanced process. Anyone who does this without already being a profitable trader with other structured trades I share in TraderLab is on their way out, called FOMO. If you can't have discipline in a learning process to give yourself advantage to actually sustain and survive your development, then it's just FOMO, and you're already put yourself in a potentially failing mode. Market comes down. Where are my buyers? There. This is what I know, okay? And where are my sellers? There. You see it? Now, buyers. I'm looking, because I'm at locations now to get long. I break high. This is my long. Now, where does it come back? Let's take a look. Where were my sellers? It's right there. Where's my breakout? Wasn't it here? Because the sellers are in control here. Breakout. So for me, I grabbed the thing, but this is more structured. Look at this is right here. You could get your long. VWAP, mid, and VPOC is here. And your stop's got to go under the low of the day. This is a bit close, you know. Now, next target. Well, you got this. You got yesterday's high. So all these are TraderLab longs. So let's just look. This is a scale. Now, this is the next target up here. Let's watch it now. So this is the long structurally, scale structurally, and here's another reason why you would scale here. Why would you scale there? Liquidity. So when I'm looking at this, I'm using order flow. What else is down here, by the way? You see this? Order flow. So when we're looking at this, we're looking at structure, we're looking at the auction, we're looking at rest. This is where order flow comes in, because right here is absorption. Who are the buyers? The icebergs. So I know there's buyers here. That's what I know. I know this is the retail price from the ETH, highest volume. Let's get into fractals. This is the highest volume in an intermediate time frame. Too low. This is the retail price from the last auction, the ETH, resistance. Break above it. What's here? Resistance. Yesterday's high. Notice the liquidity. Now, let's go a little further. What happens to this liquidity? You notice how we get darker? Watch. Where's the breakout? Here. Where's the absorption? There. Does anybody know? No. Where's the sellers? There. We break above. Let's see what happens now. ETH high. I know you wrote this down. 76%-ish probability. Don't forget you have to vet these things. And they're not mechanical. VPOC migration. You do remember this, right? I got to label this. Losing it here. If you have questions, post them. I can't see them right now, but put them in there. There is a bit of delay in YouTube, so if you want to post something, I'll do my best to get back to you. And if I don't answer your question, I'll come to TraderLab. There's the community helps out. I can't do this alone. This is a community effort, data mining, researching structured trades, helping each other do better. You know, we can't do this in a vacuum. I can't do it by myself. I'm a full-time trader, so, you know, got a few things I'm doing here. So this is now support. It's called, remember, VPOC migration. Too low. Now, why does this thing shift? Because there's more volume here. And what does volume represent? Acceptance. Now, of course, the joy of this is if this becomes too high, this might be too low. So I can do this, go to there, come back to there. If I if this shifts up and I can hold it, then I can move up to another level, which is this, based on the probabilities. And there's a sweep, okay? So now I get VPOC migration. I get VPOC migration. Where's my support? Here. And what happened here? There's absorption there. There's my buyers. And this guy, I get my sellers. Sell stops, by the way. And what do we observe? This liquidity comes in here. No clue, by the way. This liquidity comes in here. This liquidity comes in here. And then we come down. And now I don't know. Here's the thing with liquidity. They can pull, and it's like opening a hatch and it falls down, okay? So I know if I pull outside. Now, this is something I post in TraderLab, and this is part of the methodology that I share. When you're in a directional market, how do you trade this thing once it gets rolling? Well, first of all, you got to manage the lunatic under the hood. I call that Hyde, Jekyll and Hyde. Hyde's the, oh, you're missing it, FOMO, I got to get in, I don't care, I'm going to buy it wherever. Okay, that tends not to work out. The other thing is, if you're trading structured trades, you already know that we've got aggressive buying. You know what happened yesterday, which sets up today anyway, but that's besides the point. You never know where, of course, to get in. But what do I see? Urgency. This is just not a walk in the park. This is aggressive buying. Okay? So what I need to be doing is get long or add, subject to my plan. So here's what I know. I know this might be too low. And the only way I can trade when I have, at least one of the ways, it's not the only way, but let me just say generally one of the ways to trade this is if I find a retail price. Let's go shopping together in the S&P store. What's too high? What's too low? And that we change from directional, and a consolidation is rotational trading. So if we get rotational, then we have to come out here and look at our profile and go, where's our outside edges? And it's called, you know this term, buy low, sell high. Well, if the trend is up, I don't know about you, I'm not selling anything unless it's to take a profit. I'm certainly not shorting because the edges with the buyers. I think we can agree the buyers are pretty happy about having a sale, a fire sale yesterday, and those who didn't do anything yesterday or we're going higher and the trend is up in a higher time frame, etc. You all know this. So what do we do here? If the buyers were here, which is why we did not go down, and let's look what happened here. I'm going to show you a little structure, just a little something to think about. Now this will get you going. And I'm showing you now something called fractals. And what this is just a little off. I try to be accurate with this, and I'm trying to draw. So these are a little difficult to deal with here. There. Okay. Now let's look a little. Now this is not going to be material as much as you might think it is, but it's important. I want to show you a concept. This is an auction. I'm not paying that. Sellers are there. See the iceberg? And here are the buyers. And the buyers are here. When I counter rotate, now this is only a point and a half, 6 ticks. The buyers are here. The sellers are here. The buyers are here. The high volume or retail price in here is right there. This is a fractal. It's an auction. Okay? If the buyers are here and the sellers are here and the sellers get run over, what happens? This becomes support. Okay? So I know I got support. And what happens here? I rotate. Where do I come back? I come back here. Now, I don't know when I see this, what's going to happen. Of course. But now let's come back. Let's look again. High volume is there. I break high. What do I know? Sellers were here. My outside edge is here. This is called the low volume node. I have a high probability of getting here and going up the financial food chain. And again, no clue. So watch. Liquidity comes in here. And where's my outside edge? It's here. Now, this is subject to your trade plan. Liquidity comes in. This is support. So, and this is support. So what I know is the following. Think of this like your store down the street. You know, the little store, 8 o'clock, Saturday night for the movie. Okay. And it's a shopping experience. Right here, this is an auction in a fractal. Think Matryoshka dolls. So this is the little Russian doll. Inside, bigger ones. That's how you think of time frames. I don't use time here. I use whatever time it takes to complete the auction. And when I move away from this, we're done. Now, if this, where the sellers were, the sellers got run over, then support. And you know, like everything else, we take our risk and whatever happens. Support is here. Support is there. This price is too low. That's why there's volume there. And this is the outside edge. Liquidity comes in here. I've got this. I've got this. This is an ad. It's very aggressive, not a recommendation. You got to vet it. Watch the behavior. Where is my support? It's here. If I come out here, I get my sellers. Where's my sellers here? Sellers are here. Buyers are there. Absorption. Buyers. So if I'm getting long, even if I get long here or there, my stop needs to be out here under this liquidity, under this. I'm just showing you structure, you know. So let's go see what it does. Now, we have a report at 9 a.m. That's the, I think it was pending home sales. One of those wonderful reports, but it's not a biggie, but it's there. So what can you anticipate in front of reports? You can anticipate longs will even up. They don't want to take the risk. What does that do for us? Might it set something up for us? Let's see what that might be for us. Basically. Now, let me draw another little thing for you. So, what do I know? ETH high, and now I have what's good. See, these are auctions or distributions. And what it is like, oh, it's on sale. I'm not paying that. Retail. I'm not paying that. Sale. I'm not paying that. Breakout. Remember what happened here. Breakout. So let's see. Buying, breakout. Where do I come back? Let's just watch the behavior. It's not mechanical. It's just interesting. See it? Is everybody with me? How we doing? Andrew, congratulations. Glad you got that one. Is that birthday? The statistics are part of the research that we do in TraderLab. They are available. Some of them are generated out of software. Others are data mining from custom programs that some of our participants, do data mining. It takes a village, as they say, to do this work. There's just too much, for an individual to do. Especially the data mining. It does take a lot to do that. Now, let's look. Support. And this, at 9 a.m., this is called the IB30. At 9:30, now let's go back to our statistics. Taking out the first hour's high or low is a 98% probability. Taking out the IB high on its own is about a 67% probability. Past performance, not indicative of future results. So what do I know? Hey, in fact, let me show you this. So what I know is I'm going to be targeting this because it has a high probability. That'll be the first hour's high, wherever that is. So I know if I come down somewhere and I have my support here, Now, I'm going to be looking for, I have no reason to take a short unless I'm a counter trend trader. And for me, I'm more of a get in the Barca lounger and just stay with the trend as long as it's intact. And then I'm just taking longs. Now, that's me. Other traders can do other things. Now, let me show you this. Remember, what's going on here? Low, low, VPOC, right? Retail, right here. Variable, high volume node. I got to move this just a little bit up here. Variable, high volume node. Actually, I'm going to put it up here because this was where it was too high. Let's just watch. So let's talk about this VPOC migration concept. And again, I have to caution everyone. If you just step in here and you're going to just start slinging the hash mechanically, you have a high probability. I can't give you a statistic, but based on years of observation of not succeeding or staying in the business because you don't have self-control. And if you can't develop discipline as you develop the business with a trade plan and even a development process, then you're on your way out. You just haven't, the door hasn't hit you in the you know what. So what do we know? Too high. What do we know here? Retail. This was too low. This becomes too high. Now I did a lot of narration in TraderLab this morning, tons, and I don't call trades. I talk about the trades I take, and I don't say do this, do that. I do say observe, and that's about as close as I want to get because I take stops too. I take them and I post those in there too. What's the diff? Who doesn't take a stop? Got to get over it. Overhead and cost of production. If you have an edge, it's just same as the casinos. They pay the gamblers. You don't see them get upset about it or skip the next trade or pout or think that they're a failure. They have no emotional triggers. They just play the games with edge. They don't make them up here. So what is this? VPOC migration. This is a long. What is this? A sweep. What does a sweep suggest? Counter rotation. Where's my support? It's here. But what's this? Here's the possibilities. Let me just show you. When I get this, it's either that, of course, or that. Every time you've seen VPOC migration, it's been up, 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 up. Now down. Uh-oh. What does that say? Let's talk about language. Too high. What does this say? Too low. Where were my buyers? Here. So possibilities are the following. And this is, again, advanced. There were buyers here. This is called absorption. Now, if you look here as the market's coming down, this is delta. And all of it, the delta is the aggressor. And that's market orders, which are made up of stops and maybe initiators. Who knows? By the way, these buyers were absorbed. So you've got buyers here, sellers here. Buyers get above these guys. The buyers are absorbing. Going to the moon, Alice. What happens here? Why aren't we going up? I don't know. Sellers get below the buyers right there. Boom. Uh-oh. See? So now what? Well, the market's going down, but I'm looking at the delta. You look at delta, or maybe you don't. So I see the market going down, down, and it's all over, right? A little buying, a little selling. VPOC migration. So don't forget, we're over here now. So right here is an ad for me, right there. And you can see the delta, and I'm going to there. Now, this is not here yet. Let me show you this. Now, I'm getting more advanced. I'm not trying to make you crazy. I'm just trying to show you some ideas, okay? Let's look at the ideas. What happened up here? Let's draw a little box around this thing. What I do, and I found for me, when I was teaching myself this stuff, and this is not, I'm going to tell you, not easy, because of all we see as humans is noise. So I started thinking about, and this is before there was order flow or anything, I had to look at price. But I always had to think about, why didn't this go up here? I mean, obviously there's a seller, but you don't know until hindsight. But why did we hold this? Because there's a buyer. So you got the buyers here, there's the iceberg, and you got the sellers there. Now, we didn't have icebergs. We didn't have anything. We had guys on the floor. We didn't have algos. We had nothing. So, it was all different world, right? No PCs, no internet. Quite a thrill. So in here, let me move this over a little bit before all this happens. You see this volume? I'm doing the same process. Watch this. This is your retail price. It's on sale. I'm not paying that. Retail. Breakaway. What does that say? Language. This is a foreign language. No indicators. It says that's too high because I got my sellers. Now, what was too low? There. I could take a long there. And where might I come back? There. Because it was too high. See? Watch. Too high. Break. Watch. VPOC migration. New retail price. Where's my resistance? It's here. Sweep. VPOC migration. Going to the moon, Alice, right? Except for this. And I know my sellers were here. So now, as far as I know at the moment, north, because that's the trend. Now watch. Where's my support? It's here. Why? Too low, but too high. So I got resistance, I got support, and I had my icebergs and absorption happening right there. I'm putting, and what else do I know? Here. Sellers were there, break high, support. This is fractal. Support. 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 Resistance. Shift high. Support. Support. Back to here. So I'm only taking longs and I'm trading to this to this. And I know to go higher, and I don't know what it'll do. That's part of the thrill. I got to clear this. And 24 is a target, by the way. Trying to remember why. Oh, yeah, because of this. And we have liquidity coming in the book here. Let's talk about that a little bit. Now, this is support, right? Where's my stops? There, there, there. So I know if I come down here, and we might only grab inventory and then revert back to here, come back to here, and out to there. That's the idea. And as you can see, that idea went out the window as well as a stop for moi. And that's posted in TraderLab. So now that's okay. So I go, oh, that's nice. But what do I know? 63.09 is the retail price from the last time we were up here. What else do I know? I got yesterday's high. So I'm outside of yesterday's range, and all we're doing is flushing the financial commode. What happens here? This is the full session VWAP. So I'm looking at this, and I'm going, well, I'm still outside of the range. This is a key location, 63.10. Let me show you that for a moment. So I'm coming down, right? And I know 63.10, wherever it is there, is important because this was a target yesterday coming up. We open below it. We go up wherever we went at the time, 20, whatever it is. And now we're coming back to this. Resistance, advanced concept, guys, resistance can become support. And what was support in that next higher time frame? This. So this is our initial longs. Now we get up in here, and now the market gets long. What does the market do? The market goes up to go down. The market goes down, and who knew, to go up. The market goes up, and it rotates over itself, and it does it in all fractals and time frames. What is this rotation stuff? The market gets long, it's going to take them out. The market gets short, and if we're in an uptrend, maybe you want to get long. Who knows? Absorption, mid, VWAP. Now, we have a trade in TraderLab called VWAP to VPOC. Let me show it to you. And it didn't happen here. thought it was. So my next trade was going to be here. So right here, I get my selling. I'm under this. I'm under this. So I have this auction too high. I come down here. I have another auction here. Is this too low? I don't know. What about here? What about here? Where is it? I don't know. Let's watch. And yesterday's high. So I'm coming down, and I get to the full session VWAP at the time. This is where it was. And full session VWAP is material to me. VWAP to VPOC, this is RTH. If I don't get a trigger, I'm trying to remember what else was going on here. Hold on. There was something else. And I have this liquidity. I don't remember what this was. There was a reason. But this is a structured trade. I didn't take this, but I couldn't tell you what. Oh, I know why. This. Resistance. So I came out here, which is support, resistance, support. See the buying? Resistance. So I'm banging my head on here, and then I break low. And we're going to zero, right? No clue. Except I know I can only take longs in this configuration at the time. So right here, I see my absorption. Now let's look over here. This comes in the book. I look at this, and this is where order flow helps you. There are buyers here absorbing this. There's the icebergs. I get below these guys. This now, once I'm below these guys, and if I can't get traction, this now becomes resistance. Break low, going to zero. No. Absorption. Buyers were here. This comes in. This is resistance now. So let's just see what it does. See the resistance. And where was my break? Let me draw my little box here for you. So right here, resistance, sellers are here, sellers are here, sellers are here, sellers are here, going to zero. Yeah, right? No. Where's my sellers? There. Buyers are there, no clue. Buyers are there. Buyers are above the sellers. Now it's a curiosity. And full session VWAP. Outside, edge, in the range, I should say outside yesterday's range, and that 04 or 10 is important, this thing. So buyers are here, buyers are here, buyers are here. Now there's no way to know right here. Sellers are here. There's your iceberg. Sellers, buyers. So what do I know? I got sellers, I got sellers, I got buyers, I got buyers, I got buyers, I got sellers. That's what I know. Sticking to it. Where's my micro high volume? Watch. Where is all this coming from? Watch. Now, again, not saying anybody ought to do this. You got to learn it if you find it interesting. When I think about this, I think of it as a language. And quite frankly, when you use indicators, it's like Google Translate. It's something is translating the behavior in some math-based, price-based something or other, right? Well, I'm not doing it with an indicator. I'm doing it with my brain. I'm processing the information, and there's a number of elements that interact. And in order to speak this language and be fluent in it, it takes intentional practice because the market is never clear. It is random. So when we put risk on, that's what we do. We put it on, and it's not about being right or wrong. And I understand we're all attached. Where do we come? Sorry. So resistance, resistance. What else? Resistance. Where's support? Isn't it there? High volume, retail price. Notice where I come back. Here. That's a long. Now, where am I trying to go? There. For a scale. Then where? There. Notice what it holds. Teeth chatter. So actually, I took this, and I remember I posted in TraderLab. I'm trying to go here, but this I see this come in the book right here. So I got scaled here. In other words, I just grab, I have a limit, I put limit orders out, you know, and I don't put it at a price. I put it a little ahead. That's all. But, so my order was like sitting here. So when I saw this, I took a scale, and then I figure I'm going to get stopped out with everybody else. Isn't that correct? Well, what happens? The buyers that were here and here come in again. Sell stops come out. Thanks for playing. This is when you get a coupon to the buffet. Then where do I have to come back? There and there. Next target was 24. And the target after 24 is 30, not a recommendation. I don't know where. Oh, there you go. 30. And that's as far as I got. Now I'm going to show you something a little more. This is an advanced TraderLab structured trade. I haven't seen any of this, so this is all new to me. Because my last trade, my last exit was 30. And this is all in the TraderLab, all posted. As targets. Now, when we're all the way down below, these targets are already known in TraderLab. 24, and this. And I have another structured trade. I always forget to mention this to you guys. We have something called the IB continuation trade. And here's the other thing about these trades is they are structured trades, but the point of structure, a structured trade fits into something called context. So certain conditions of the market, you're only taking longs, and this is called the IB continuation trade. It's break and then up. The other part of this is on different conditions, we would actually be shorting this to come all the way back in, but not today. Okay, so let's talk about the IB continuation trade. Now remember, 24 is a target. There it is. And then 30. So if you're taking this long, you'd be working 30. So let's look at the actual trade. And I'm going to come up after this trade because I think I'm going to be pretty current, maybe. So we break out. This is range extension. We take out the first hour's high probability. Trend is up. I think we can agree. Now I'm going to look for a place to get long. Let's look what happened here. Liquidity. And then this, but they pull. Thanks for getting out of the way. And look where the liquidity comes in and watch. So this is, and let's look at something else. Outside edge. So this is, remember, the auction. I'm not paying that. Yeah, but it's on sale. Location, like real estate, liquidity. This now also is support. So I got support here. I got an outside edge over here. I got resistance at the high volume right there. And I got 30. That's all I know. This is absorption there, break high, IB continuation long. Now, guys, everybody takes stops. I mean, this could have just done this. Remember where the high volume is? It's right there, resistance. So this is where you decide in your plan if the context is up with a 30 target above, is it worthwhile to you to take a stop to go for 30? For me, yeah. You know, I didn't get this because, you know, at a stream, I can't trade in the stream. It's like walking and chewing gum. Doesn't turn out so good. And this was our target. That trade could be done right here. You're just going plunk, plunk, you know. Now, what is this? This is support. See it? Now, if it's going to go higher, we got to get over this. So, subject to the number of contracts, you're going, the way it tends to work, long, get risk neutral, stop goes under here, you take it to target 30. 30 is support. If you aren't done with the thing here, this is your area. Buyers are here. You have, and where the sellers? Here. Your stop could be right here, and you have to vet everything. And then we go up, and now you're looking for continuation higher. I don't know. Let's watch. Sweep is here. This is something you have to pay attention to. Support. an ad or trade management opportunity. Whoa, how far did we get here? Well, apparently we got there. So now, if this acts like support, and I get here and I see liquidity come in, is it possible that if this acts like support and I come up and I have to take this out and stay above it, might this mean if I come under here that, and there's more liquidity there? Now, this is a separate conversation that it's time to get out of Dodge, or you're trailing under here. One or the other, up to you. There you go. Okay, current. Questions, guys? Thanks for your patience. Please give a like. I hope you're getting something out of this. How do I deal with the emotions? Ben is asking me a good question. How do you deal with the emotions? Practice. Ben, I deal with the emotions by recognizing them. I anticipate them. In my trade plan, I understand I'm going to be triggered because it's our primal wiring. So there's no way around it, Ben. So in the morning, I actually I coach myself. When I used to sit on a desk with other traders and I was coaching and mentoring traders, we would do this in the morning before they open. We would kind of get together and, and we kind of, I want to call it mantra, but we say, okay, I'm going to feel this. Here's where it comes from. When I feel this, my job is not to respond, but to acknowledge it. I can't stop from feeling it. I spent years trying not to feel. I thought Spock. You guys know Spock, right? I wanted to be Spock. So no emotions. Not possible unless you get a lobotomy. So short of a lobotomy, I said, well, I'm going to still feel these things. But I notice when I respond to my feelings, FOMO, fear of loss, chasing, all the things we do, skip and trade, and everything. That doesn't help me. Now, randomly, it helps. Now, here's the problem with random helping. Suppose you skip trades or you move your stop to break even where you have no reason to. You're moving it out of fear of loss, not because the trade is failing. Over time, that's going to cost you a ton, maybe take you out of the business. So I had the same responses early on as everybody else because we're all the same. But I did, and I don't remember what year it was, whether it was late 90s or early 2000s, I figured out maybe I should keep track of these things. Brilliant. So I called it the error cost calculator, and I found out that not only did I have certain what I called setups back then that absolutely were losers, even though they had winners. Statistically, they didn't have an edge. They just had random winners. So I started throwing those out. But the other problem was there were trades I would skip. I'd move my stop where I shouldn't. If I took a stop, I would skip the next trade because mentally I was still attached to the last outcome, not accepting that every interaction is unique, just like the casinos. Every hand they deal is unique. The way the gamblers play the cards is unique or random, but the games are not random. So I had to get it in my head that I'm in a gaming business, not in the business of being right, and not predicting what's going to happen. And those are all the things I did early on. Needing to be right, wanting to be right. Now, wanting to and needing to are two different things. Wanting to avoid risk. Why? I'm wired to avoid risk, not to seek it. So when I'm going to put risk on, I'm pushing back against primal wiring. I didn't understand any of that. The error cost calculator revealed over time that I was throwing thousands of dollars away, basically writing a check out and giving it to the gamblers. Now, I was a gambler, but I was still writing it out. So when I started getting more understanding of the business over time, I started working on limiting, not eliminating, limiting the errors and getting rid of the trades that didn't have an edge. And it was very hard early on because early on I learned classical bar charting. I'm just saying, and those are measured moves. So I thought everything was, it's going to go here, it's going to do that. Well, not so much. But who knows? So anyway, this is done. So now it's in the Barca launcher. I'm going to throw some levels on from an Investor RT, which exports levels. It'll help us see structure a little better. Let's get to it. Let's look at your questions. And thanks again for visiting TraderLab. If you find TraderLab interesting, and if you're working hard but waking up a trader Groundhog Day, working hard, same outcome, then you might want to consider visiting the TraderLab. I'm not a vendor. There's no cost for this. It's the community. There's a lot of experience there. Senior trader over 50 years. I've got 46 professionally and otherwise. I used to, let's just say, manage a substantial amount of dollars over a lot of asset classes, everything. And it was swing trading and position trading. So day trading was not something I really got into until later on. Maybe trying to remember, I don't know, 8 or 9 years in the business, something like that. Can't remember anymore because we didn't have we didn't have internet, we didn't have domes. If you wanted to put a trade on, you basically would have to write it on a ticket, timestamp it, pick up the phone, and call my guy on the edge of the pit. That was it. So it was what you call analog. Very exciting. So day trading was really not something that we could do. Anyway, neither here nor there. So I learned market profile from Peter Stottlemyre. He created it. It was licensed by CBOT. So about 1985 is when I learned the market profile. I couldn't trade with it. I abandoned it for a while. Because, you learn something and it's kind of dogmatic or institutionalized. Like you do this, you do that. Well, trading doesn't work that way. That's why you can't imitate somebody. You can't do what I do. I can't do what you do. There's traders out there certainly much better than me. And that's okay. I can't do what they do. So I have to figure out what fits my psychology that I can get in a groove with. We're all different that way. So the idea at TraderLab is not that you come in and do, it isn't plug and play. I mean, we all think it might be, but if you've been spending any time in this retail space, you've seen all this stuff that says the only one thing you need, the secret of this and that. I got to tell you, it's such nonsense, and you know it already. So don't keep doing what doesn't work. I call that trapped equity. We've all invested time, dollars, brain damage, and the dollars are invested in chat rooms or whatever you do, right? And if you're not where you want to be and you don't have a sustainable business, you've trapped that equity. Well, I believe if you come to TraderLab, you can unlock it because you can take those experiences, positive and negative. You can take your process that you currently use and deconstruct it, reverse engineer it. Why does it not work? And make it an asset. Why do retail traders put their stops here? They all do it. Why does the market come down here? Because that's where the fuel is. If we know how retail traders behave, are we going to do what they do, or are we going to use what they do and create an asset out of it? If we know that there's buyers here right now and the sell stops are coming out, if sell stops are coming out, where are they coming from? Under here, 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 under here, under here. Now we're making lower highs, so there's nothing to do. But let's watch how far. Now we may have the high of the day, no clue. Not my job. My job is alignment and to read the behavior. So I had resistance here. So buyers are above. I had resistance here. Buyers are above. So all this is fine until this, because the buyers were here. This trade is over. Now this can become resistance. Now I don't take shorts. I just exit longs, just me. Don't need the brain damage, and it's too much work, and what's the point? I used to get cute in the old days, trade like a whirling dervish. Long, short, long, short. Well, now what I do, I'm not recommending this, I'm just saying it's what I do. I use the shorts in this kind of market as exits. I don't take shorts, I exit longs, you see? So then I'm going to look where the stops are under this behavior where I had buyers. And I'm going to be looking to see where do these buyers potentially come back in? And where are the stops? I got stops right under here. I have an outside edge. Now, the thing with this is we're coming down and nobody knows where's it going to stop? I don't know. Do you? I don't. If you do, come to TraderLab. Clue us in. We'd all like to know. Here's what I do know. I had absorption here. So I'm going to look back over here. Now I'm going to say, well, I had sellers here. I had this, and I get above it. It becomes support. Support. Algorithmic behavior. Is that support? If it is, where is resistance? It's going to be there because that's where the sellers are, and the sellers are under the buyers. So this is my microstructure resistance right ahead of there. So let's see if you can do it. Now, I'm not suggesting anybody trade like this. What I'm sharing with you is how, remember I said this, I don't use indicators. What I'm doing is I'm reading participant behavior. I'm as close, you might say, to real time as anybody can be. Right here, there's my absorption. Look at the sell stops. That's sell stops. Thanks for playing. They get a coupon to the buffet. Where is my resistance? Let me throw it in here, and you'll see where it comes from. And it's not a recommendation. Where did it come from? There. Resistance. Support. Resistance. So if I am, now this is just an example. It's not anything more than curiosity for us today. Sellers are here. So what might happen? Well, I may come back and test this. And so I got to scale ahead of this if I took a long. I'm not saying anybody should. I'm just saying maybe, right? Maybe. Let's see what it does. So this is not something that most should be thinking about. What do I know? Sellers dropped it. Buyers were here. Microstructure, too high. What else do I know? I got stops here, and I got my high volume sitting there. What I can do is come out, and this is called mean reversion, and the mean is here. So I can come back and check this area and potentially get stops out that are sitting right over here. So I think of that as fuel. So I want to do is if I got long as an example, I don't have much range here, but if I'm adept at this, I could take a long here. And I'm saying that's not what anybody ought to do. I'm saying is you can learn to read the story, and you can then, using order flow and an understanding of market mechanics, which is what the TraderLab is about, to understand this is your obstacle. Let's see what it does. Is everybody tracking? You getting something out of this? What is it you look for to know you have buyers and sellers? Yeah, Mark is asking a good question there. How do I know if I got buyers and sellers? Well, it's the absorption. And the other part of it is where's the stops? So I always say, think like a retail trader. Don't act like one. Remember I was talking about trapped equity. You know, all the stops we've all donated to the other, you know, the floor traders retirement fund, I used to call it. Now it's the algos and the hedge funds, but the algos. And so I know location. I don't know what will happen. I know what might happen. I know where it might happen. Where's the high volume? It's in here. Where were the buyers? They were there, under here. Where do I go? Where are the buyers? They were there. What do I do? Pick the retail stops off. I want to buy when the retail traders are selling. And that's what's going on here. There's 200 stops coming out, and there's the selling delta. Why didn't the market go down? Iceberg. And as soon as I come up, then that's my resistance. You see the reaction? So and I'm just giving you examples. I'm not saying these are trades anybody ought to take. If I wanted to get long, I'm scaling there. And then I'm either going to come back and come out. But look what, just see what ran in front here. So how do you use that? Well, you got a couple choices. Now, let's think about what's going on in the order flow. Now, I never know. So let's remember, we don't know anything. We're ignorant. The best you have in trading is maybe. Write that down. Maybe this is it. And you want to be out of this thing when this shows up. You go up, I don't want that. And this is algorithmic behavior. Now, the question is, now remember where the resistance is. You see, if I get long, I only got a couple of points. This is like trading with a shoehorn. And I'm not saying you should or could or shouldn't. It's not my job. It's your job. But if I get long, this is where I'm going. Now, here's the problem. Is this, and this is what I'm always thinking about. When this comes in the book, are they actually are they short and they want to skew the book down and blow out these buyers? Or are they pressing the book to buy and then they're going to pull and open the hatch and then they're going to flip and push, right? It can do anything, right? What I'm seeing here is this. There's more. This looks to me like we're going to break. Now, what do you do? Well, depending. You got long in here, you're scaled ahead of this, and then your stop stays under here, and you, what is it we used to do in school? You promise you never do it again. I'll never do it again. Well, I don't know what's going to happen here. So if I'm following a trade plan, then I take my trade. My job's to get risk neutral. My stop goes under where the buyers were. And if it comes back down here, I get taken out with everybody else. And thanks for playing, Tom. And I get a coupon to the buffet. The other side is I come back up here, and these guys who are in here, and I don't know, remember, they skewed the book. If this pulls, it's like opening the hatch. If this drops down, it's going to press. Which one? So I'm going to watch the liquidity here. Right now, this is still in here. But if it's an algo, we can come right up to it, and it can pull at the last second. So it's because it's computer operated algorithm. So we don't know. I got a selling iceberg here. Can the buyers, think Pac-Man, can the buyers consume the sellers? Or do the sellers, see them, consume the buyers? Pac-Man. So we're going to watch resistance. And the buyers either have to eat up this liquidity and get through, or the sellers are consuming the buyers and we're going to break down. That's all I got for you. I'm right there. Anyway. And then we're all hesitant when we take a stop because we're emotionally involved and we're feeling the pain. You guys have questions. Let me take a look. Thanks for your patience. And thanks for visiting TraderLab today. Hope you're getting something out of this. I try to cover a lot. If you want questions answered, I can answer them much better. And so can the TraderLab community if you come to the TraderLab. And there's a link in the bottom of YouTube. There's no cost for TraderLab. It's open to everybody. Doesn't matter what you do or how you do it. Not the point. The point of the TraderLab is a community of traders who all want to develop the business side of, trading. This is a business. You approach it like a business, you might be able to build sustainability. If you're approaching it like a video game, I'm going to suggest that's a video game. But that's not a business, is it? So, and you may not be conscious of it. You may be playing a video game. And because a lot of you growing up with video games. So you bring it here. But this is not a video game. This is a business of randomness with edge. See this? Can you use an understanding of market mechanics to potentially extract an edge? If I take this long, I'd be scaled there. Is that useful? Now, by the way, I take this long, I take a stop right there too. So let's not forget that. But if I understand, and if you understood market mechanics, what indicator is going to tell me that this should be my scale and I can enter here? What indicator would tell me that? Now, I'm not saying you should enter or even take this trade. This is market mechanics, and this is trading in fractals. Think Russian dolls. This is a little one. Well, the behavior is generic. What's going on in the, quote, higher time frame? The same behavior Same fractals. There's the high volume. There's the high volume. There's the high volume. I'm doing the same thing. I'm coming back to the high volume. Same thing in the higher time frame. I'm coming back to the high volume. Why does it come back? Well, I'm not paying that. Back to retail. Where's too low? Oh, it's on sale. Fractal. Back here. If it's too high, sorry, Charlie, I'm not paying that. And then we're going to leave it and find another price the market likes. If we can, Pac-Man can eat up these sellers or they pull, then they take the lid off. If we can consume these guys, then possibly this will flip around and support and push. Right now, we got a lid right here. You see it? These are some of the elements you can learn about, not only in TraderLab, but in the Bookmap server. There's a lot of additional education, all available at no cost. Stocks, options, crypto, order flow with a high-tier tool like Bookmap. Market maker behavior, algorithmic behavior, and a lot more. And other streamers, different approaches. This is not, this is not the only way to approach the market, but I think from everything I've done, at least, and, Belt Trading Systems, done a lot of different things over 46 years, that this is the most basic. Now, what does basic mean? Cleanest representation of market mechanics. If we can strip away random inputs and really get down to the minimum number of inputs, I think it gives you a better opportunity to create more clarity of what you're going to do in an environment that's 100% random. If you have random inputs in a random environment, you just have garbage. Because how do you know what gives you an edge? It isn't a P&L is not your edge. The result of edge is the P&L. But if you're judging P&L, you don't know what creates it. And you're always going to have winning trades. The idea is to eliminate randomness from your side. Can't eliminate it from the market. We don't know but we can understand the market, why it would come there. Do you understand why the market would come there? And do you understand where that level came from? It came from over here. You see? Do you understand this could be a long back to there? Do you understand this can be a long back to there? Do you understand that if we get through here or they pull, then we can come back there? That's high volume in fractals. And if I can't get through here, then these buyers are going to say, I'll catch you later, I'm going to lunch. And then we go the other way. It's not more complicated than that. But it is random. So, you see what I'm saying? Hope you're getting something from this. Don't forget to leave a like. It's always nice to know that you're getting something from this. And let me show you what the TraderLab community looks like. It's a serious community. It's not romper room. There's a lot of posts going on here, charts. Thanks for posting that. Just a lot of good stuff. So, and I post all along the way here, a lot of stuff in here. I'm going to see, this is a trade one of our traders took. It's a structured trade in the NASDAQ. So you don't have to be an ES trader. You can trade, by the way, this process, it works in any market that has volume. So, and I don't remember anymore. I remember some of the, like orange juice and some of the things that I used to trade years ago, and coffee. I believe it was platinum, or I can't remember anymore. But, some of these things have 4 contracts in them. That you don't want to trade. But this works across stocks, options, everything, ETFs. This is a process. It is really what makes the market work. And it's still random. That part doesn't change. But you might be able to create something. You can see all my posts in here and everybody else. It isn't about me. I'm just like you. Difference between me and you is I've been doing this longer. That's all. Same thing, same problems, same challenges. So that's one part of it. The other part is the library of webinars. Let me see if I can find that. Well, let me get this out of here. There we go. Thanks, Ned, for doing this. This is our library of webinars. Start with the primer webinar. It's got about 34,000 views. It gives you a high-level overview of the concept. There's nothing, by the way, if you are a shopper, you push the cart down the aisle. We're doing the same thing here. We're shoppers. Buy low, sell high. Well, the market's going down. We want to sell high, buy low. Today, the market's going up. We want to buy low, sell high. This is not hard. What is hard is where. Right? Okay. So, and if things change, we might want to be short. So we have to try to get into alignment. So the idea of the TraderLab is to help you understand how the market works, why it does what it does, how to get in alignment with it at times, use structured trades that have a statistical edge that favors you, and teach you and help you understand the emotional obstacles, and for you to develop an understanding of the business you're in and to recenter yourself psychologically to the idea of randomness, and you're going to pay. You're going to pay the other participants because the casinos, who are really good at this, they pay the gamblers also. Overhead and costs of production, not a personal failure. But how do you separate that, right? That's what TraderLab's about. Understanding the business of trading. Now, the other part of it is building a business. How do you create a sustainable business in an environment like this? How about only getting involved when you have a statistical edge? Knowing where your trades are before they show up. This is not I better get long here. No. That's FOMO. What this is, where is my next trade potentially going to show up? What does a trigger look like? Where's my obstacle, which we can see with order flow and the auction confluence? Why, if I get long, I got to scale there. Would you know that? Now, I don't know if it's going to go there. You don't know that either. But do I have a better opportunity for sustainability if I understand market mechanics? I'm not using backwards looking conflicting indicators. Now, here's the thing about indicators. I'm not saying you can't use them. Most traders think this is a business of indicators. And I always ask traders, when you open your software toolbox, higher time frame, and there's 150 or 200, whatever's in there, why? You know why? Because they all work randomly. But maybe, we think it's time frames and more indicators to get that final mix. Find the needle in the haystack that everybody else has done the same thing before you didn't manage to do. And we somehow think we're going to find it, right? And of course, all the influencers out in the internet world, they all got it, right? And all you got to do is pay them X amount of dollars. You can have it too. Have you been there and done that? Well, you're going to keep doing it? Or are you going to maybe say, wait a minute, I've got trapped equity here. I've got a lot of experience. Is there really a plug and play solution? How about no, there isn't? So if that doesn't exist, let's not keep doing what doesn't work. Unless, of course, it works for you. Come to TraderLab, help us do better. Nobody has a monopoly on this thing. We're all trying to get better. We're all human. We all make mistakes. There is no perfection. By the way, watch this. It's about an hour long. And watch this one. Stop gambling and start winning. And another one is, are you trapped in Trader Groundhog Day? That was me. That's when you work hard, you curve fit, you have winners, and you end up in the same place. You wake up, you're working hard. Now, maybe it isn't your effort. Maybe it's your process. Maybe you're looking for confirmation and certainty to avoid risk. You're trying to solve for something that's not in alignment with this actual business you're in. You're in a gaming business. You're not in a prediction or risk avoidance business. You got to accept risk to get yield. Resistance, huh? What do you think? Is this interesting to you? If it is, please use the link in the bottom of YouTube. Visit the TraderLab community. There's no cost. Don't forget to leave a like on the way out. Thanks so much for visiting TraderLab today, and I look forward to seeing you guys soon. Thanks again, guys. Appreciate your interest and your time. Look forward to meeting you personally in the TraderLab. And don't forget the like on the way out. Thanks.